Good day, guys. Moneybag Traders over here. So basically, this is gonna be my first video on YouTube, right? So I'll be starting with the fundamental analysis. I just want to show you guys the process that I take on from going from the fundamental analysis and then to carrying on to the technical analysis. How like I just the basics on how I just analyze everything. So basically, this is a website called Pound Sterling Life. It's for free. You guys can use it. So I just read fundamental quotes that come from analysts. I just want to figure out what the central banks are doing and what they got going on, what they are planning to do, and all of that. So I'll show you guys on how I have been able to capitalize on GBPUSD from last week to this week forward. So basically, I'll be starting with the pound um, fundamentals. So they're saying the pound sterling, Bank of England keeps rates unchanged, and then they're saying that the pound rallies against euro and dollar. So what they're saying is basically the fact that the Bank of England decided not to change their interest rates or take their interest rates to negatives, it made the pound to gain value, or it made rather the GBPUSD to go up or to rally against the euro and the dollar, right? So this is what I do. I'd read all these all of this quote all of these paragraphs, right? In fact, I'll read the whole article and then I'd pick up the pinpoints that are important. Sorry, that's the helicopter passing. Okay, going on forward, I'll be reading just some of them, but then you need to read everything, guys, everything. But for the purpose of making this video short, I'll just be reading quotes that are important, right? So as you see, they were saying the MPC also voted anonymously to keep quantitative easing levels unchanged. This is positive for GBP, as negative interest rates are not imminent, and with all eyes on the second quarter economic recovery in UK, such as rate cuts probably wouldn't be necessary in 6 months, right? So they're saying the Bank of England won't be cutting interest rates in 6 months, and basically that alone add to factors on the GBP appreciating, right? So from the macro point of view, hence we see the market pricing out the odds of negative interest rates, right? And then carrying on, is saying justifying the decision to keep policy settings unchanged. A statement from the bank revealed UK economic growth is projected by the bank to recover rapidly towards pre-COVID levels over 2019. So basically, there was a chart. I don't remember on which article was it, but then basically what the chart was showing me, it was showing that the pound, or rather not the pound, sorry, not the pound, in the UK has been the fastest country where there's been vaccines. Like it's the fastest in terms of vaccine rollouts. It's the leading against the euro and the dollar. So meaning that in the United Kingdom, they've been vaccinating people, so they've been doing it in a much more faster pace than the people, rather than the United States and the euro. So the bank also indicated it was surprised by the strength in the economic performance towards the end of 2020, noting it expects UK GDP to have risen a little in the final quarter of 2020 to a level around 8% lower than in the final quarter of 2021 of 2019. They note that this forecast is materially stronger than expected in their November monetary policy report, when the bank's economists last released their forecast. The pound has rallied as the market cut expectations for negative rates in near future. Right. So while the market pricing for negative interest rates has persisted for some time, to date the Bank of England has squashed the idea of rates being sub-zero, at least for now. Right. So basically, also this is a positive quote. because of if they're not going to go into negative interest rates, that should at least be good for the pound, right? It should be good for the pound, especially that the fact that they're leading in terms of vaccination rollouts, right? So we would have to see significant economic weakening in the UK for them to become a reality. I know the inflation expected to tick up as the year goes on. The BOE can't afford to sink sterling as we get back into recovery mode. There are reasons to be optimistic as a UK investor. With the usually successful vaccination drive, right? They're telling you guys again about the usually successful vaccination drive and supply issues being overcome, it's not unrealistic to believe the second half of the year will produce the return of consumer confidence, right? So I'll carry on and then skip off a bit of these things so the article so that I don't take long on the video, right? So I'll be reading let me start here. So the outlook for the UK interest rates and pound exchange rates therefore rest with the progress of the country's vaccinations program, which for now looks to be on a course. Some analysts say it is only a matter of time before the bank cuts rates again. It's my view that the economy how it is and the hint dropping from bank. Basically, when they say it's my view, this is the analyst from the CEO of the Group, meaning guys, when you just copy and paste this on Google and then search these people, you'll realize that these people are very smart guys, and they companies where they work at have a huge return in terms of the profit that they're making, right? So these people will not give you false information, right? So it's my view that with the economy how it is and the hint dropping from the economy from the Bank of England, rate cuts are looming as it's increasingly clear that the quantitative easing agenda is not sustainable. Green says if interest rates are cut to 0% or lower, the effect will be to stoke a rise in equity market as investors rotate out of cash. All right. So I'll just try to go to another to the latest, right? One of the latest articles, which was this one, right? Oh yeah, this is the one I'll show you guys quickly. I think this is the one that has the chart. Oh, unfortunately not. But then also this one was saying UK business confidence holds up on vaccination rollouts. This statement alone is positive for the pound, right? So I want us to move to the sentiment of GBPUSD just to check on what it's saying. So basically it's saying bullish. So with this sentiment, guys, when it says bullish, you want to do the opposite. But then you must realize that this sentiment is not 100% accurate. So you don't want to be applying it on your analysis every time. Like now it's saying it's bullish, and when it says it's bullish, we must sell, right? So even though it's saying buy, but then we must do the opposite of what it's saying. So basically, you can see that it's telling us to sell, right? So we won't be doing that. We'll only be looking for buying opportunities, like I've been doing for the past week and this week also. I've been looking for buying opportunities on GBPUSD, which is the primarily the only GBP pair that I've been focusing on, right? Merely. So like I'll go to GBPUSD to the chart, right? So let me just take off all these trend lines, right? Not all of them. I just because I'm gonna use some of them, so I won't be taking all, right? So let me just try to zoom in and show you guys what the monthly has been showing us. So obviously we've been having breakouts on monthly highs, right? As you can see, the monthly high of the 2 of November the monthly high of November actually was broken, as you can see there, and then December the monthly high was also broken, continuing to the monthly high in January, right? So basically, clearly we've been looking for buying opportunities only, right? It clearly shows you that the market has more momentum to go to the upside than the downside, right? So I'll just go to the daily time frame, right? And I'll be focusing on the trades that I've been taking from last week, right? bear in mind that today is the 10th of February. And then today is Wednesday, right? So last week was around here, right? So let me just do that, take this off, right? And then I'll try to switch to a much more smaller time frame, right? So we do know that from the fundamental side of things, we are safe, right? So we'll be focusing on buying opportunities only, guys. That's what we'll be focusing on, right? So when I saw GBPUSD violating this high on the 4th hour time frame, right? You'd want to wait for a pullback into that area. As you can see, there was a nice pullback into this area, and then it produced a nice pin bar over there, and then your buy stop was just going to be above the pin bar. I'm sorry, let me just, I had my buy stops just above that pin bar, right? And then my first take profit, I was targeting the high of this candlestick. As you can see right there, the high of this candlestick, I was targeting there. And then moving on to the much more smaller time frame, I just want to show you guys on how you are able to capitalize on the much more smaller time frame, especially the M5 time frame. But I won't be focusing on the M5 time frame on this specific video, right? So let me just delete that block over there. So guys, as you can see, this is what I was showing you guys, the breakout of this first touch and second touch. It broke out, waiting for a retest to go there and then buying from there on, right? So as you can see, ever since it's been shooting up, right? People have been able to capitalize on it a lot, guys. And if I can go to the M15 time frame, you'll be able to see that you were able to make a lot of profits, guys, very much. So you would want for the market to basically, you wouldn't want to buy at highs like here. You just want the market to trace back and then start buying. As you can see, when the market came, when it on the 9th of January, right, there was a bit of a consolidation. So when I see this consolidation normally, and like when the market is moving like this during this consolidation, I really get excited because I know that once it breaks out this consolidation, the market is just going to keep on continuing to the upside, right? So I waited for a breakout. As you can see, it started breaking out there, and then I wait for the market to retest back into that consolidation, which it did right there, and then I take a buy to the upside. I just take a buy to the upside, which I did right here, and then I was able to capitalize on that. So when you're looking for buying opportunities, really, you wanna mark out the market structure, right? Which is your higher highs, higher lows, lower highs, and that etc. As you can see, this is a higher high. We'd wait for the market to pull back to that higher high and start buying, but we wouldn't be saying that the market won't be able to come here and then go to the upside, or even come to this point of the consolidation, just above that consolidation, and continue to the upside. We're not restricting our analysis from that. There's any possibilities, anything can happen. We're not saying our analysis is perfect or anything like that, or it's guaranteed, There we go. Even when you switch to the M15 time frame, you are able to see a lot of things, right? So also we want to mark that trend line over there. As you can see, the market has been respecting that trend line, right? That's why even when the market came back to test this trend line, as you can see, basically right now it's going down. So being able to draw out this trend line is like having a lot of confirmation, really, because of, as you can see, this is a higher high. If the market comes back and tests that higher high, it's basically at this trend line, giving us more opportunity to go to the upside and targeting therefore again, So also I want to share with you guys of how I've been actually looking at it, actually like how you've been able to take trades early in the morning, right? So when you switch to the daily time frame, you just want to look at really the market breaking a higher high, right? Let me show you this example of this candlestick, and then the next day, which is the 9th of February, I'll just move to a smaller time frame, to the 9th of February, when the market started breaking the 37.48 level, which is this level. So let me just zoom out and go to the 9th of February. The 9th of February was over here, right? As you can see, the market broke the daily high in the morning and then just shot to the upside. And guys, I want you to know that my goal is to target 40 to 30 pips per day. I don't want to target a lot of pips, because of that's when you're not certain, especially now that there's coronavirus and all of these different things can just affect the market in a huge way that could lead to losses. So just target 50 to 40 to 50 pips per week evens, or per day evens, and then you just set for the day. Don't trade anymore, you know. So guys, I think this is it for the day. I'll be sharing more videos with you guys and teaching you guys on how to read fundamentals and note out things, for the specific pairs that you want to trade. Peace out, guys.